Hello, neighbors, and welcome back to the neighborhood. I am Squealer D, and I am back again. And this time, I am back learning about the stock market. Just so you guys know, let me let you know where I am at on the stock market. So I am 40. Yes, I just turned 40 years old. And I have no stock market experience whatsoever. I have never traded on the stock market. I own 53 Doge shares or money bits. I don't know what a Bitcoin is yet, guys, called. I know that the stock market exchanges shares, but I do not know. I guess it's just a coin. I got 53 Doge coins. That's it. That's my extent of knowing the stock market. So, my goal is now that I'm 40 to learn everything I can about the stock market and see what happens. Perhaps I can get a retirement plan going. I was set back a little bit and just fill you guys in a little bit of why I'm doing this. It's not for popularity or to trick people into thinking that I'm going to get rich on the stock market. It is simply because the most well off people put their money on the stock market. It is a yearly 10% about average that you can gain on the stock market, and that's really great. And also, because I had 2 back surgeries, and it just set me back about 11 years from the healing, learning to walk again. It set me back, and my career had to be changed because what I did I can't do anymore because of my back problems. So here I am. It's time to get smart, everybody. Get smart about our finances. And that is why I am here. I am going to get myself smart. So the very first step to learning how to trade on the stock market is learning what the stock market is. So here I am today, and I'm going to be honest with you guys. This is the 3rd time that I'm making this video. That's right. 3rd time. I got my coffee in my D cup. The D is for dinero, guys, because that's what we're learning about right now. So I have my coffee ready to go. It sounds like we have sound today. This is the 3rd time, guys, because I made this video 2 other times, but I made them silent. Yep, silent with no sound. I recorded myself without sound twice, about an hour and 45 minutes of talking about the stock market. So these pages, I know these pages. I know what the stock market is, and I know what shares are. Surprise! But we're going to go over it today so that I can reiterate it in my mind and show you guys. So what they say, guys, let me tell you, is teaching something helps you learn it a million times better. Maybe not a million times, guys. Maybe my statistics are off, but that's why I'm doing this. We got to learn a little bit more, right? Learn a little bit more about the financials and statistics and things like that. They say that if you want to do stock market, you should learn basic investing, like statistics. Yeah, if you take a statistics class, I've heard, I didn't learn, I heard that it helps with this. So perhaps statistics is in our future. And then my statistics will be right instead of overgeneralization like I like to do. But let's get right into this. What is the stock market? The stock market is a set of exchanges and other venues where shares of publicly held companies are bought and sold. So it's like a store for shares or equities, securities, whatever you want to call a share. That's what it's for. You can buy them and sell them there. Simple enough, right? It's like a store. The term stock market refers to several exchanges in which shares of publicly held companies are bought and sold. Such financial activities are conducted through formal exchanges and via the over the counter OTC markets that operate under a defined set of regulations. Both stock market and stock exchange are often used interchangeably. Traders in the stock market buy or sell shares on one or more of the stock exchanges that are part of the overall stock market. The leading U.S. stock exchanges include the New York Stock Exchange and NASDAQ, and I've heard about both of those before. I taught this twice. So, let's go. Stock markets are venues where buyers and sellers meet to exchange equity shares of public corporations. Stock markets are components of free market economy because they enable democratized access to investor trading and exchange of capital. Stock markets create efficient price discovery and efficient dealing. The U.S. stock market is regulated by the Securities and Exchange Commission and local regulatory bodies. So the Securities and Exchange Commission, guys, where have we heard this before? If you watch the news, which I watch the news every single day, and if you want to get in the stock market, you are going to have to watch the news. The stock market is very news reactive, news reactive. That's a word. Yeah. So if something happens in the news, like let's say Elon Musk were to pass away, it would affect the stock of his companies, Twitter, I don't know, his car company, Tesla. All of his companies would be affected by his death, and therefore it could affect the stock market. People might share or buy, trade the stocks, and that would change the stock market a bit. So news, that was a horrible example of how news affects it, but it does, guys, because the news recently reported that Silicon Valley Bank failed. A big, gigantic bank, guys. The second biggest bank failure since back in the day when the banks failed because we believe they were too big to fail. So SVB failed, Silicon Valley Bank, and what they do is they invest in tech businesses. So like Etsy is a tech business. It started up on the internet. It doesn't sell anything. It's just tech that helps you sell your items. So all these tech companies that couldn't get normal loans from other banks, they got it from Silicon Valley Bank. It was opened for them to specialize in tech, and it failed. And so the failure came when they were force regulated by the SEC, the Securities and Exchange Commission. They went in and they took over the bank, and they are working on paying the people their money and figuring out ways of banks are covered if they lose your money, but only to $250,000. And unfortunately, a lot of those companies, like let's say Etsy, had a lot more than $250,000 in the bank. So if it's federally insured up to $250,000, a lot of these people were worried that they were going to lose it all. Since then, the SEC has stood up and changed things, made rules for this. So we are going to see what keeps happening with these banks and with the SEC. But we do know who they are. They are an independent federal government regulatory agency responsible for protecting investors, maintaining fair and orderly functioning of the securities market, and facilitating capital formation. So they police the stock market. Alrighty, so we know what the stock market is, guys. What is the stock market? It's a place where buyers and sellers meet to exchange shares. Okay, so we know that it's a place to exchange their shares. Now, let's understand how. So, the stock market allows buyers and sellers of securities to meet, interact, and transact. And then the SEC regulates them. The market allows for price discovery for shares of corporations and serve as a barometer for the overall economy. Buyers and sellers are assured of a fair price, high degree of liquidity, and transparency as market participants compete in an open market. So, the first stock market was the London Stock Exchange, which began in a coffee house where traders met to exchange shares in 1773. The first stock exchange in the United States began in Philly in 1790. The Buttonwood Agreement, so named because it was signed under a buttonwood tree, marked the beginning of New York's Wall Street in 1792. The agreement was signed by 24 traders and was the first American organization of its kind to trade in securities. The traders renamed their venture the New York Stock Exchange Board in 1817. So my question is, 1792, so 1800, 1800, 1900, 200. You guys, this is over 200 years they've been doing this. Who are these first 24 traders? That's my homework. Let's find out who these 24 traders were and who they're related to now, because I bet you would be surprised. That is a homework agreement. I'm going to write that down. Guys, I have a little tiny book here. Yep, that's my trader book. I suggest, mine says, becoming a day trader. And then I just write down all of my questions that I need to go over. Like, for example, what is the stock market? What is a stock? We're going to get there, guys. I'm going to tell you what a stock is. And so I write it down, every little thing that I've learned that I need to focus on more. Write yours down. I'm going to write down 24 traders that signed the Buttonwood Agreement. I know we can click on it. It would probably tell us right now. My suggestion is to you guys, as helpful as this is, you can click into it. You can learn everything about the Buttonwood Agreement, signed 1782 by 24 stockbrokers, and it will even tell you, like, what is Wall Street? So these are helpful clicks, but don't get lost down a rabbit hole, my friends, because it is a rabbit hole. Make yourself a learning guide and stick with it. You will learn this. It seems overwhelming. Today seems overwhelming, but we can get through this. So, though it is called a stock market, other securities such as EFTs or exchange traded funds are also exchanged in the stock market. So, an EFT is a type of pooled investment security that operates much like a mutual fund. We still need to learn what a mutual fund is. A mutual fund is a managed fund that pools money from shareholders to invest in securities. So a mutual fund, a lot of people are in mutual funds and they're in their companies. They are part of a business where they pool their money and they invest it, and then your retirement comes off of that. I don't know, because I don't have that. Good coffee, guys. But we'll learn more about mutual funds also. Okay, so EFTs can be purchased or sold on a stock exchange the same way that a regular stock can. An EFT can be structured to track anything from the price of an individual commodity to a large and diverse collection of securities. They can be structured to track specific investment strategies. The first ETF was SPDR and S&P 500 ETF, SPY, which tracks the S&P 500 index, which remains an actively traded ETF today. So, out of everything I just read, guys, I've been reading this stuff for 2 weeks now, and I still do not know exactly what this is. SPDR 500, which is SPY. I read everybody that gives tips say they trade SPY. I will learn about it. We're going to learn about it, guys. So EFTs are electronic funds, kind of like mutual funds, but not quite. Okay. So, we can practice trading, guys. You'll see this everywhere. Take advantage of virtual money. Take advantage of paper money. I personally right now am doing TD Ameritrade. What am I doing? Where is it? So what I do is think or swim. And Thinkorswim is from TD Ameritrade. And it is a platform with tools, investment products, guidance, retirement, education, research. It pretty much has everything. But you can do this on your phone. You can do it on a laptop. You can do it on a computer. And you get the Thinkorswim app. And you can actually trade in this. Do you have money that you want to throw in there and give it a go? You could. I suggest you use this thing called a paper trader. And it allows you to practice with everything they have on the paper trader. You can have a great amount of money. You can practice with a little amount of money. And you can see how it works. I suggest this. You might not even know how the program works. It took me days to figure out Thinkorswim and how to even buy a stock, guys. But that's okay, because this is not easy stuff. This comes with practice. If you log on to Thinkorswim every single day and you go through their education tabs, you will learn things. They are very helpful. All of these sites that I am going off of right now, if you are interested in learning the stock market, write them down. Thinkorswim, trading platform. Webull, trading platform. Both ideas of online trading that you can use paper money. You can practice. And you know what they say about practice, guys. Practice makes perfect. Right now, I am using Investopedia, which I think is wonderful. They have very bulleted, free information. They also have a simulator so that you can practice trades on Investopedia. Investopedia also has, I have not used it, so I am not telling you that it is great, but Investopedia has an academy where you can learn investing for beginners, for instance, and they will have limited access for $199 with over 78 lessons, and you can learn the basics for beginners about the stock market. I have not paid for a course yet. I am just doing this on my own. But as I learn more, I am hoping that I will learn which one of these courses I want, because I love to learn, guys. Learning is a good thing. Hearing somebody explain things to you is never a bad thing. So we will keep waiting, and as soon as I find a course that I am willing to take, I will let you guys know which one. I won't show you, obviously the whole course. That's kind of stealing, but I will tell you what I got from it, and I will tell you how good it is. I will give you my review. I have not used any yet, so even though I show you Investopedia or I show you Thinkorswim, I haven't put any money into any of these sites. All of this information is free information. Another great free information site is Khan Academy. You can do Khan Academy for free. You can just log in, sign up. They also have Khan Kids, so kids can learn about money, and you can work on this with your children. Maybe you have a family project, learning to get rich. Either way, Khan Academy is great. They have videos, what it means to buy a company stocks, bonds versus stocks. These are all just, you click in, it will show you a video. They will talk to you and tell you what all of this, what it means to buy stock, to buy a company stock, and they break it down for you. Super helpful. And guys, Khan Academy is great for anything. If you have a question and you don't know how to do something, maybe you need to help your child with a math problem. Khan Academy, guys. You can sit your child in front of Khan Academy and it will teach them anything. Like, I'm pretty sure anything school related is on Khan Academy now. They are huge. I've been using Khan Academy for, I want to say 13 years with my children when I homeschool them, and it is brilliant. Literally brilliant. Try it out. If you need to learn something, try Khan Academy. If you need to learn something investing or you want to read something investing, I'd say read it on Investopedia also. It's great, guys, to get multiple eyes, multiple sets of information. It's a better way to learn. Even if you don't think so, try it. Read multiple things. Even if you think I'm wrong, do it anyway. See, just give it a go. Okay, so we know what the stock market is now, guys, right? We know that you can buy and sell stock. We also know that it's a barometer, which means what, guys? It shows how healthy the overall economy is. Let's see, what does it mean by it's a barometer of the economy? Does that mean that the stock market is the economy, or that the economy is the stock market? Let's see. The stock market is not the economy is a phrase that gets used quite often. Trust me, guys, I hear that all the time, or I hear people say, the stock market's going to crash and our economy's going to fail. And people don't understand the difference between the stock market, the economy. Are they the same thing? I guess we should learn. So, many pundits argue that the fluctuations of the major indexes tasked with tracking the performance of the country's biggest companies have little impact on the average American. What's an index, guys? An index is a tool for measuring change in a group of representative data. So if you see this graph, that could be an index because it's a tool for measure. Okay, so it's just their tool for measuring. So the majority of shares trade hands among the super wealthy. That's what we were saying. Super wealthy, guys. We got to get up there and learn what they know. What is a share? So a share is a unit of equity ownership in a corporation. So if you buy a share, you buy a piece of their pie. If they're selling 6 pieces of pie and you buy one share, you own a share of their pie. Okay, sounds easy, right? Does that mean you own the company? If you buy a piece of their pie, guys, does that mean that you own the company? Shares are units of equity ownership in a corporation. For some companies, shares exist as a financial asset providing for an equal distribution of any residual profits, if any are declared, in the form of dividends. Shareholders of a stock that pay no dividends do not participate in a distribution of profits. Instead, they anticipate participating in the growth of the stock price as company profits increase. Okay, so we have two different things here, a share and a dividend, two different things that they're saying. So shares are units of equity ownership in a corporation. So you don't own the corporation, you just own equity in the corporation. So if you buy some shares of a company, let's say we buy 5 shares of Donna's company, and Donna's company goes up, where we're making better, we're doing better, guys, and now Donna's company is $6 a share. Everybody who just bought 1 share of my company now just gained $1, right? Because it went up. The equity, unit of equity went up in my share. So that's how we gained our money. We didn't gain money because my company got richer. We gained money because the price of the share went up, right? My company went up, so the price of the share went up. I'm $6 instead of $5. You bought a share, and now you own that share, and that share is worth $1 more. So you gain money by doing that. Now they're saying some companies give residual profits in dividends. So what's a dividend? If it's not a share, what is a dividend? Well, a dividend is the distribution of a company's earnings to its shareholders determined by the company's board of directors. So now we have a board of directors at the company sitting around, and they decide if the company does dividends. Not all companies do dividends, guys. You can Google right now which companies do dividends, like some of the bigger ones. And some of them are stopping doing dividends. So, I mean, check it out. We'll check it out. Dividends are often distributed quarterly and may be paid out as cash or in the form of reinvestment in additional stock. So this is not like the stock went up $1. This is like the company said, hey guys, we did really good. So we're going to take this money we make and we're going to separate it between all of the people who own some of the stock. So maybe it's $1 million and they separate it by, I don't know, what is there, 1 million people invested in their company and each person got $1. So your stock didn't go up by $1, but you got $1 from the dividends. Make sense? If not, we'll go back over it a lot. So only eligible shareholders will get the dividends. So now we know what a share is and we know what dividends are. Shares represent equity stock in a firm with 2 main types of shares being common shares and preferred shares. And as a result, shares and stock are commonly used interchangeably. So if we say, let's sell our stock or we sell our shares, it's the same. Fine. But we have to know the difference between a common share and a preferred share. So We will go through those. We don't want to get really deep. Let's just do what is the market and what are shares today and just get a basic of why we're doing this. Why do we want to learn this? My why was right up here, guys. Where did it say? Maybe it's the other page, but it said that the stock market is mostly controlled by the super wealthy. And that is my why. It doesn't have to be everybody's why of why they're in the stock market. I feel like if the stock market is open for everybody, it is, guys. We can all learn the stock market and we can all buy shares. We can all buy EFTs. We can all trade. We can do all of that. All you have to do is have the money, the funds. You can do it for fake money, but we can all do it. We can learn it. We can be investing pros. But the only people that mostly do it are the super wealthy because they have the money to play. So that's my why. My why is I want to do what the super wealthy do. Simple. I want to have nice cars. I want to have nice houses. I want to step on people's necks. No, I don't really want to step on people's necks. But if I wanted to, have the money would let me do it. So that's my why. You just have to find your why. And any why is a good why, guys. We don't have to have a specific why. Your why could be because you want to buy a fast car and go to this track, because I do not suggest you drive fast on the streets, my friends. Buy a fast car. Go to the track. You want to drive around like a wild man. Do it. Do it. That's what I say. Do it. Everybody should do it. If we all got on the stock market, imagine what would happen. Ooh. I'll help you get there. Just watch. Watch me learn, guys. Watch me learn. It will encourage you to learn. I'm not saying that watching my videos are going to make you a stock expert. But what I am saying is if you watch these videos every single morning with me, how are you not going to want some? That's all I'm saying. So, we know what the stock market is, guys. We know what a share is. We're rolling right along. We know that we can get into the stock market as a normal person. We know we can buy shares as a normal person. And that is about the basics of what the stock market is. It's a place where you buy and sell shares, EFTs, things like that. Shares are also called securities. We learned all these things today. Just learned normal, basic. It seems very, very on the surface, guys. A lot of these words you're seeing down through here, we don't even understand what they are, what they mean. A primary market, a venture capital. You guys, you want to know where I've heard venture capital? On TV, on a game. Venture capital. It's a game, I think. I don't know. I don't know what it means. We could click on it and learn right now. That's how great this internet is. Look at this. Learning. It's a private equity investor that provides capital to companies with high growth potential in exchange for an equity stake. A venture capitalist. That's why the game is that. Imagine that, guys. You go in, you have a lot of money. You take a company with high potential and you give them, this is Warren Buffett. Warren Buffett is a venture capitalist. Oh my gosh. The things you realize when you start to learn. Holy cow. So now we know what a venture capitalist is. It's a private equity investor. It's all these rich people. They go to your company when you have a good idea and they give you money and they say, hey guys, you had a really great idea. Let me invest in you. And then they give you money and your company gets bigger because of their money. I see. Fun startups, venture capitalists. Now we know a new word today, guys. Everybody learned something new that wasn't the stock market or shares of stock. All right. Well, I feel like I am accomplished, guys. I learned something new. And I finally made a video of what is the stock market that has sound. We should all just be happy for that. That I made a video that actually has sound. Yeah. We're talking. You're listening. I'm hearing. And now we are going to call this a day, guys. I'm going to let all of this sink in on you. If you're interested, go check out Khan Academy. You see it? Khan Academy. Check it out. Go check out Investopedia. It's great. Check out TD Ameritrade. Check out Webull. It's Webull. This is one I want to check out too. I need an account. These are simple, guys. You just go in, you sign up. You don't need any money. You don't need anything. You don't put a credit card in. It talks about money. It talks about a bunch of stuff. You don't need any of that. You can just log in, sign up, and practice. We can do paper trading right there, guys. Webull. I've never used Webull, but they have it. Paper trading, just try trading stocks. You don't have enough funds yet? That's okay. You guys know how fast money can grow. Maybe right now while you're watching this first video, you think I will never have money to put in the stock market. I can barely pay my bills. Do you guys know how fast money grows? If you put $100, just don't buy Starbucks for 2 weeks at work. If you had $100 and you put it in the stock market and you gain that by 7%, you would have $7. And the next month you would be trading with $107. If you grew that again, you'd be trading with over $115 the next month. Eventually it would grow, right? If you grew at $15 in 2 months, and that's only with a 7% increase, by the end of the year, you could have, I don't know, guys, I'm not doing the math on the top of my head like that, but what, like $53? It's $53 more than you had drinking those coffees. And that's only with 100. And I'm sure everybody watching this can come up with $100. And I know people say they can't. But Squealer, how am I going to come up with $100? My check goes as soon as I get paid. Well, guess what, guys? There's things you're buying that you don't need to buy. Yep, even when you're poor. I'm poor. Buy things all the time I don't need. Just saying. You got to make priorities, guys. Google priorities. Google, what should my priorities be as an adult if you don't know? Mostly, it's things you need right now and the future. And what we're talking about right here, this is your future, guys. Even understanding the stock market will help you. Even if you get to a point where you don't put money into the stock market, you just understand it. You understand what's going on. It will help you in life. Trust me. It never hurts anybody learning more. So sit back, relax, and enjoy this whole series I'm doing. I am going to help you understand it. If this is hard for you to understand by reading it, well, don't read. Listen. Here I am. I'm reading it for you. Maybe that's the way you learn, and that's okay. It's okay. My daughter hates it when I read things to her. She has to read it herself. So maybe that's how you are. Maybe you don't need me. But maybe you need me just to tell you to go out and give it a try. Ain't no harm in giving things a go. So that is my little tidbit for you guys today. I'm bopping off of my soapbox and I'm bopping off of this live. I will be back. I'll be back tomorrow to do more of this wonderful stock market learning. Tomorrow we will, let me see what's on the list, guys. I'm telling you, get yourself a little list. So if we did, what is the stock market? We know what that is. Buy and sell shares, right? We can buy, we can sell. EFTs, we know what they are. They're like mutual funds, but not a mutual fund. So we know what a stock is. It is a piece of equity in a company, but it doesn't make you owner, right? So tomorrow we will talk about why a company would issue a stock in the first place, so we can understand, like, exactly why. And that's a good question. And also, I know that there are these things called bonds. And what is a bond? Is a stock a bond? We know that a stock is a security and a stock is an equity. Is stock a bond? Homework for tomorrow, guys. Let me know in the comments. Is a stock a bond? And that's what I'm going to leave you on. That's your homework. My homework is I am going to look up the Buttonwood Agreement and find out who those 24 traders that signed that Buttonwood agreement are and who they are related to. I think it matters. We shall see. But your homework is to let me know if a stock is a bond. Is a bond a stock? I don't know. Let me know. Anyway, guys, I hope you had a great time. I had a great time. My coffee is almost finished, so I think I am almost finished, and I will see you here tomorrow. Same place, same time. Be there or be square. Have a great day, neighbors.